Good morning from Chicago traders. It is 8:06 a.m. Chicago time. Sorry about the delay and apologies, of course, for not being able to do a Trader Bite for the last couple of days. My Google Hangouts account, for some reason, just stopped working. So I actually created a new one, and I'm holding this from a new account, and I'll work with them to get it sorted out. You know, I cannot complain about Google Hangouts on air. Huge service, and it's free. Uh, the equivalent service to this is probably live stream at $300 a month or something. And so, doing this as a community service, I want to stay on top of it and keep you engaged with trading and with the way that I think trading is done. And the way I've trained prop traders to do it. And so I want to keep this alive and going. So here we are. Glad it's solved, and I'm sure fiddling with it more this weekend, I'll be able to restore it back to normal so that all of the archives are in the same place. Anyway, derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. So in looking at the overnight news flow, very little in the way of macro data. Equities trade in minor positive territory. Very little pertinent macro news flow so far. The U.S. dollar index once again trades at highs, subsequently placing some modest weight on the euro, U.S. and British pound U.S. pair. And other than that, the EU bond yield rises for the first time since the ECB QE began on Monday. EU Commission not satisfied with recent Greek development, not enough progress being made in fixing Greece's situation and problems. By the way, Greece has filed a formal complaint for reparations from Germany for damage caused during World War II. It's very interesting, very dramatic, that's for sure. Let's move on to what we should expect, what's on deck today. Overall, there's not much news flow. PPI came out at 7:30. PPI final demand month on month came in at negative 5%. The expectation was for positive 0.3%. So negative 5%, pretty bad. We saw a reaction on that in the overnight in the Globex chart, and since then there has not been anything really. We have coming up at 9 Central, 10 Eastern, a half hour after the open, we have University of Michigan sentiment expecting 92. This is a pretty important number. I'd put it at 2.5 out of 3 stars. University of Michigan sentiment prelim expecting 95.5. I apologize. The low end of the range is 92. The high end's 104. Consensus expectation 95.5. And then from there, we have our Baker Hughes at noon Central. Remember, there's a 5-hour time difference between Chicago and London, and a 6-hour time difference between Chicago and Frankfurt. So it's going to stay that way. We're going to have a smaller time difference between Europe and the US or North America until March 29th. And then other than that, we have ECB's Neuer coming on at 9:30 Central, speaks in Paris about debt placement. And then BOE's Haldane speaks at a conference in New York at 10:15. That's really it. No earnings, nothing else. It's expected to be a fairly quiet Friday. Let's switch over and look at and do a quick rundown of what's happened over the last couple of days. So if you recall and were here for the Trader Bites last week, I started talking about a selling day coming on. that the market's looking kind of heavy. At that point, we had the high at 2117.75. Remember, we're trading June now, June 2015, and so all of my prices have been adjusted down 7.5 points. That was a premium yesterday, 7.5 points. So you can see here on the chart, 2110 quarter instead of 2117.75 for the high. Essentially what I'd said is there are some clear signs that this thing is likely to roll over, that it's done on the upside. And and then the next day we had a strong up day, didn't go very far. And then from there we rolled over and started to sell off, with the Friday being the big selling day, non-farm payrolls Friday. And then since then, we have pulled back pretty deep. We did not pull back deep enough to test the point of control of this massive balance zone from October 31st till February 12th. That balance zone was a 2019 quarter, 2026 75 on the March contract, big number. And we started to move back because of the way we have rolled back over yesterday. We're going to start an MC, a new micro composite today. Let's make it a hologram or hollow blocks and bring it up front so that we can see what the market's doing and where it's headed. And yesterday it rolled over and pushed higher, and it's exactly what I typed about in the morning. I'd said that you're looking at a drive in the morning and caution not to short it. And then we went over the target being 2058 initially, and then above there 2062.75. The way it closed yesterday was very, very interesting. Of course, volume was off yesterday because some people have rolled, some people have not, and volume continuously accelerated on the front month June, and was dropping off on the March contract. And you could see here that we had a strong push up. We opened at 39.50. We tested 39. 39 happens to be the point of control. You can see that pink line there. Happens to be the point of control. Very nice taper on this day, the prior day, on the upside, and the market ended up closing near lows. With a close near lows, I did expect that it would likely and having being at the open in value, I did expect it to rotate down, at least attempt to go lower. It did not, which is a huge clue, a huge piece of the puzzle when you open in value against the point of control on a fairly balanced-ish profile, yet it has no interest in going down. It tells you that the higher time frame's active and not to fade. In other words, fading in trading means going against the trend. So my caution early on was not to fade this trend and to look for it to push higher and higher and higher throughout the session. It's exactly what we got. We pushed through, and then we finally closed that gap we left behind. The gap we left behind from non-farm payrolls day, and then we rotated back down once that's been filled. But look at what happened to the point of control. Point of control very steady. Once the first hour was done here, this is where the IB was put in, right in here. Once the first hour is done, the IB is put in. That's when the point of control means something to me. It takes more significance once we get done with the first hour's business. And you could see here that it stayed steady, 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 moved up to what was still a bizarre looking high. We kept pushing up against 2054, a double top at the high a day stat kicking in here in the mid 70 percentile range. Looking for a break. We did get the break. That stat fulfilled, and then we break higher in a point of control that's right up against the high. This is a high probability of a break higher. And finally, when it breaks, it just trades a ton up there. It trades enough to take for the volume to take over what took place, the trades that took place at 2053. Very bizarre action there. 13,000 traded, 13,900 to 13,800 traded up there from 13,500 down here. So to me, that was very odd. It looked like it may be roll related, but then I look at the March contract and you don't see the same kind of volume rolling from one contract to the next. I felt that was very odd. We ended up with a very weak high. And given the weak high that we have here and the way this point of control moved and the trend for the day, essentially the auction, this tells me that the auction is incomplete. And then I expected a higher high overnight and for this high to be taken out. Next target up again is the 61.75 and then the up here at 62.75. Those are the next targets up. So overall, the big picture, if we switch to our 15-minute here, we've fallen out of the upper balance, which is this profile here. We've gone into that big, ugly kind of trading area that we were in last year, of the fall into the winter, and we've tested all the way through. Look at how beautifully this is performed. Straight fall through these LVN zones, these low volume rejection zones. A little bit of volume that was created here based on the MCHVN, the high volume nodes here, and then it slices right into, over the last couple of days, it slices right into this very big node here, tests the other side by a couple points, and then comes right back off of it. So a lot of people are looking at this leg down as, okay, this is an initiative move here, and we're looking at a pullback for further lows. I've talked to several people who are betting that way, and if we look at how this is pulling back on the RTH, you can see that 61 is the 38%. The mid of this is 70.50, so that idea gets canceled somewhere around 70, 73, 74. I think it's likely to continue higher based on the action it left behind yesterday. I'm not going to comment on the long term what this is going to do, because although I can sit here and do the CNBC thing and take a low risk guess as to what it's likely to do, I'm more of a day trader, and I'd like to stick with what I know. And what I know is that the overnight session rolled over down deep into this profile today, 2050. We have a point of control above us in the overnight. The overall structure of the overnight profile is pretty ugly. We have a double distribution with a sharp kurtosis up top and a very blunt area down below, and we are stuck below the mid, below the point of control, and we're opening in this zone here. It's 8:19, so we only have 10 minutes to make a move. So we're likely to open here in the LVN zone, which creates a toss-up situation. In my opinion, this looks fairly weak on this move down. It looks like it might have an additional leg down. Remember, the overnight stat is in play. There's a 98% probability that the 61 quarter or the 50-50 gets taken out after the cash open today and before the end of the session. So which one would it be? And it looks like the low may be better off in play. However, it's just a toss-up. It's just a toss-up. My primary hypo is wide chop this morning, looking for wide chop, assuming it does not drop before the open in the next 10 minutes, looking for wide chop on the open. And then whichever side breaks is probably the side that's going to dominate early on in the session. So I'm going to sit on my hands early on, wait for this to break one way or the other, look for the opening swing, and then look to push my trades in the direction of whichever the opening swing side breaks. Again, I still have a play here at the high. This high looks fairly weak. It's 5 points away, 4.5, 5 points away. This high looks fairly weak. We have a point of control just above it on the overnight, so there's a little bit of overhead resistance if we do get up there. But overall, you know, we have a double top at the high on the overnight. I'd hate to fall in the trap of overanalyzing the overnight session. It does not have the equity supporting it. So it's not as meaningful, but the overall structure looks like sellers are holding the ball right now, are controlling the ball right now. And so I'm looking for this overnight low to be broken, but for a shallow test. This could be one of those situations that we've seen in the fall where we have a big up day and then we have a big down day following it, you know, where we take back this entire structure lower. Excuse me. Looking at the profile, you could see that we have an excess low here. We open, test down, and we have a very clear excess low here. This is a clear rejection of prices that were previously accepted in the 2039 down to 2035, 34 range. But still, the market can still come back and retest these areas below, down into the 2050, 50, 2051, 50-50 being the low. So that's where we are. A quick look, and I know I'm over my time here. 8 minutes left to prep. Quick look at crude oil. This is just a terrible mess. It's been a very interesting trade. I've been trading crude oil more and more. Very interesting trade. We had balance down here, which if you were listening to me a couple of weeks ago or 3 weeks ago, I'd said that I'm looking for this to bounce up and to hold steady in the 47 to 50 range in the March contract. We're trading April now. Prices haven't changed all that much. And what it did is it pushed right through to the 55, which was 54 something in the prior contract, and put in a W formation. The W formation looked, with a higher low, looked like it was a formation to break higher. It did not. It failed, and then it failed again. It's very, very difficult to read. I did read the Wednesday play on the crude oil inventories release. Spot on. I had 47.30 for the low, and it came down to 47.33 after breaking lower to 47.60, and that was a pretty sweet trade. Those numbers come right off of this profile over here, the balance. So this thing is trading inside of the balance. I think that, in my opinion, if this has any excuse to go higher, it's likely to go to 49.95, get back in line. Notice that the two composites now have a point of control at 49.95. 49.95 on the old composite, ending on the 2nd, and then we have the current composite, which continues on to the 10th, having 49.95 as the most accepted price. So right now, oil is just hopscotching across that price. 5 minutes to the open. I'll leave you from here. I just want to remind Stage 5 traders, we have our AAQ webinar and pop quiz today. And then on Tuesday, I'm working on getting Chad Payne from Linsoft to come on and do a convergence event and show us all the new features of their software. This is a software I use called it's called Investor RT by Linsoft. If you have any questions, reach out to me through futuretrader71.com/contact. Take care.